Rohr here with an early concise highlight on Tuesday, August 18th, 2015. It is currently 7:45 a.m. U.S. Central Time. As our regular viewers know, we're coming to you later than usual, and that is because we wanted to see the U.S. housing starts numbers, which is the last really critical data in front of the FOMC minutes release tomorrow afternoon. And we'll be getting back to all of that macro view in a moment. But first, it's important to note that the equities are off a bit today due to some other weakish data earlier this morning, and yet govies are off on a stronger than expected UK inflation data. So, what has all this meant to the markets? Well, here we are once again with our short-term charts, hourly on the left, 30-minute on the right, of the U.S. S&P 500 future. And at present, it is off for, pardon me, at 2,095. Now, this is interesting because in its way, this is setting up as kind of a replay of last week. You'll recall we had that strongish M&A influence after a week ago Friday. We had the weakness into late week, Thursday and Friday. We had the Berkshire Hathaway takeover of Precision Castparts, that major aeronautics manufacturer. And now we saw the weakness into the early to mid part of last week on the Chinese currency devaluation, but then the sharp recovery after that currency stabilized, and Chinese markets were actually holding up very well, and the market worked its way back up and finished the week last week right up against 2090 to 89 again. 2090 to 88. And of course, that's a key Fibonacci level. And as we had said, as it was working its way up from early yesterday morning in the global view, and that's why we're able to do a concise highlight today that is really only the S&P charts, because everything else is consistently the same as yesterday's global view. We have the pushback above 90 to 88. You also had this failed up break at 94. It squeezed above, but we said there's resistance all the way from 88 to 90 up to 2100 again. And on the Fibonacci level, maybe even just a bit above it. So here we sit this morning at 2094, 2095 area. And the question is, can it weaken further? Because if it starts getting much back below 2094, you go at least back 2090 to 88 on a test, much below which it's shown it can readily get back down to the 75 to 78 area, not just in the last few days, but this is historic at this point. We're going to look at a bit more of that on the intermediate term charts. And the other thing that's important today is that if it starts to slip back below 94 by any degree, even back down to 90 to 88, there's a good chance you weaken off your hourly MACD back below the upper runaway band that it just ground its way gradually above yesterday. Now, if it should end up having the ability to hold on and get above 2100, higher resistances are into 2108 and up again at 2119 to 25. We've seen so many times recently. And so, once again, 2090 to 88 is important early today, and we'd be keeping a close eye on that. And that pretty much does it for the short-term view of the S&P 500.